Hi everyone and welcome to another quick tech video. Today we are looking at SEK Limited. So SEK Limited is an Australian based company that basically let you advertise for, if you're an employer, let you advertise a position, vacant position, so then people can apply. And if someone's looking for a job, you can post your resume, cover letter, or attributes about you. So then you employers can have a look at your resume and then headhunt you really, and you can apply for jobs. So it's just employment platform really. I use it personally. It's quite friendly to use, and it does some really nifty things, like it can look at your your past employments or employment history, and then it can extract that out and add that to your SEK profile. So, but I did not know that it operates in 18 countries, and including China and a few other countries in Southeast Asia and Latin America. So that's really new to me. Anyways, that's pretty much it, and it's great that it has a really simple premise for you to kind of wrap your head around. And again, I think I mentioned this in my very first video. You want to find a company that you can kind of explain in 1 or 2 sentences. Okay, so the PE ratio hasn't got any. Industry is 108, which is crazy for me to kind of look at. But I'm wondering if they mean like a technology industry, or just the sub-segment of employment platform. Okay, so looking at the quick ratio, there's also no quick ratio. So so if there's no earning ratio and there's no quick ratio, and being on investing.com, I know if it's negative, they don't really show it. So what I'm expecting is that the earning is actually negative. So P ratio is price to earning ratio. Price cannot be negative, and so earning must be a negative. So with the quick ratio is negative, I'm assuming, and we'll find out, I guess, that either the cash flow, the current asset is negative, or however, or maybe it has no current liabilities, which you can quickly look in really. It does have dividend yield of 0.43%, which is really not great at all. Okay, cash flow. So cash flow is operating activities down. And I guess if you look at it, it's like it's 2020, maybe because there's a lot of businesses who are going out of business and they don't need to hire. And one of the ways that SEK get money, I assume, is through businesses posting jobs and stuff, with the job market down. So is their earnings. But in Australia, the job market is turning around. Investing activity. So it really is a technology company in my eye. So I would say that if there's any investment, it will be investing in better technology and connecting employers to employees, offering really unique features. So that does. I hope that's what they are doing, and we can have a look at that a little bit later in the balance sheet. Financing activity. So it's borrowing a little bit of money in 2020. So probably could be a good time to borrow money, since the RBA, the Reserve Bank of Australia, really wants to keep the Australian dollars down and increase economic activities. So they're keeping the interest rate quite low, and it's cheap money, and it's probably a good time to kind of borrow money rather than issuance of stock and stuff like that. Overall, the net change in cash has gone up, but looking at the items here, it seems like it's almost one what is it, 2/5 is coming from debt, and the other 3/5 is coming from operation. Right, looking at the balance sheet, so you got a current asset of $817 million. But it has gone up, and cash gone up, and total current liability is definitely higher than the amount of cash. So, well, at least it's not negative. I mean, I've seen investing.com displaying like less than 1 for quick ratio. I'm not sure why they didn't calculate it here, but it just shows that they don't have enough cash to last even a year. But you got to put that into perspective. A lot of tech companies, always kind of looking for investors and stuff like that. But the ones they got a footing of the market, they can grow quite rapidly. All right, let's go to the income statement. Revenue gone up, which is good, but let's see what the net income is telling us. Net income is actually negative, which is interesting. So we want to find out why it is negative. Gross profit, admin expenses. So admin expenses, is pretty consistent. I mean, it's actually gone down, which is a good thing. When and revenue's gone up, expenses gone down. But what is unusual expenses? There must be so it looks like there's something here. So we want to explore what that is. They could have purchased something. So it's hard to say that this net income is truly reflective of the company's operation, because they must have bought something quite significant here. But if you just add that back in, you can see that it's actually probably around $100 million. So, that's down from last year, but again, that's because of it's 2020. And then you got tax and all of that. Sure. Net income before extraordinary items. And yeah, so basically it's just because you see a negative in income doesn't mean they are losing money. Could mean that they're investing in something or unusual expense. So we want to find out what exactly that is. But again, this is quick text, so we just move straight along, but with that kind of in mind. Here is the chart for SEK. So it has a good growth over the years, actually. Let's say if you invested in 2009, that was $3. So in 10 years, you got appreciation of a tenfold, which is really, really fantastic. But let's look at the more recent dip, which is the coronavirus dip, the COVID dip. So it went from 10 to 30. So that's still a significant amount of growth. But I think like if you bought anything during that dip, I think you would have got a little bit of money back. So good. I had a lot of money back, actually. So yeah. So but from 10 to 30, that's a 200% profit. So your shares would have grown by 300%. But again, looking at the net income here, you want to find, we were looking at this, so it's gone up, then come back down. So that's not a big difference. I would consider that as a flat line. There's a significant dip here, so we want to find out why. But from then it gone back up. It's just this particular year it's gone down. Again, we've got to keep in mind that they have some unusual item. Right, so let's have a look at the MACD and the relative RSI and see what's happening. So the RSI kind of showed that it's kind of overbought, and there could be a hype running it up, which is totally fine. You can catch that wave. Probably for me, I think it's a little bit too late, but let's see what's happening. So I just feel like it maybe is going to be overbought a little bit. There's definitely more risk buying up here. I would definitely wait for it to come down a little bit before buying it. So let's put in a fib retracement and see what's going on. Right. So here we have so the last high point was at the 61.8 percent mark. So if you use that instead, so it looks like it's gone up by 30% since its top high. By 61% since this point here. That's a significant growth. Like if you bought here, it gone down, and you bought some more down here, yeah, so that would have been a good run for you. So now let's see if there's if retracement will where retracement would happen. So it would happen, I reckon, if it does come down, it will probably just come down to this point. Yeah, I don't think it will come down to this point just because there is momentum in the market with all the cheap money lying around. There's also the possibility that it's going to go straight up. For this kind of situation, I probably wait out a little bit. Especially, you can look at that candle and see, like, right, there's definitely a significant jump in share price. So we want to find out exactly why. And yeah, there's going to be some retracement in my kind of experience. So this one here is I reckon there should be more research into for this particular stock. It's not a buy yet for me. I'm not going to jump in tomorrow when the market opens. I would definitely wait and observe and find out a little bit more about the company, and I like especially that unusual item on their balance sheet. But yeah, at the end of the day, I think it's carved itself out a nice part of the market. It's quite a and a very easy to understand kind of business model, and it's definitely doing its marketing well. A lot of people know SEK.com, so it's always good when you have brand recognition. So yes, that's pretty much it for today's quick take. If you like what you see, please like, share, and subscribe. If you have any other comments, leave it down in the below comment section. And thank you so much for watching this quick take video. Have a great day, everyone. Bye.